Good morning, traders. This is Long Put Condor Strategy, defined risk and profit, and 5 cash trading company, penny stocks, penny shares, profit growth. That is also mentioned here. Long Put Condor Strategy is a neutral option strategy used when you anticipate low volatility and expect the underlying assets price to stay within a specific range until expiration. Long Put Condor Strategy defined risk and profit, and 5 cash trading company, penny shares, profit growth. The Long Put Condor Strategy is established for a net debit cost to open the trade and offers limit risk and limited profit. Market view neutral, expecting low volatility. Structure 4-leg debit spread. All options have the same expiration date by one out of the money. Put at the lowest strike. Sell 1 OTM, put at the lower middle strike. Sell 1 in the money, put at the higher middle strike. Buy 1 ITM, put at the highest strike price. Conditions: the strike prices should be equidistant. That's mean $1,000 K4 K3 equal K3 minus K2 equal K2 minus K1 dollar. Calculation for debit. Calculation for profit and loss. Let $ds be the net debit paid to establish the position. $d equal P1 plus P4 minus P2 plus P3 dollars, where Px is the premium for the put option with strike, Kx dollar. Maximum profit, maximum gain occurs if the underlying price is between the two short put strike at expiration. Text maximum profit equal K3 minus K2. This is the width of the inner short spread minus the cost. Maximum loss, maximum risk occurs if the underlying prices is outside the range of the long put strikes. $S, LEK1 dollar or S dollar, GK4 dollar. Text maximum loss equal D. Break even points. There are 2 points where the trade break even at expiration. Text lower BEP K1 plus D dollars. Text upper BEP equal K4 dollar. Actual example hypothetical options on an ETF USA. The most liquid options in the USA are typical or major indices or ETFs like SPY, S&P 500 ETF. Underlying assets SPY hypothetical price $450. Expiration 30 days out. A sweet spot for non-directional spreads. Leg action. Strike price. Premium per se. Cash flow. 1. K1. Buy OTM put. $435. $435. Shares equal $2.50 debit. 2. K2. Sell 1 OTM put. $440. $440. $3.50 credit. K3. Sell 1 ITM put. $4,045. $445. $4.80 credit. Number 4. K3. Buy ITM put. $450. $450. $6.50 debit. These are 4 legs. Trading process calculations. Select a platform in the USA. Interactive Brokers, TD Ameritrade, Charles Schwab, Thinkorswim, or eTrader are major platforms that offer multi-leg options trading and typically allow this strategy. Order entry on your chosen platform easy using a multi-leg trade ticket on Thinkorswim. Select the Long Put Condor strategy and enter the 4 options legs simultaneously. Use a limit order to ensure you get the net price you want. Net debit calculation. Initial cost D equal P1 plus P4 minus P2 plus P3 dollars. D dollars equal 2.50 plus 6.50 minus 3.50 plus 4.80 equal 9.00 minus 8.30 dollar equal $0.70. Since one contract represents 100 shares, the total cost maximum loss is $0.70 times 100 equal text TBF $70 per contract. Maximum profit calculation. The distance between the inner strike is K dollar 3 minus K 2 equal $405 minus $440 equal $5. Text maximum profit $5 minus $0.70. That's mean $4.30. That is profit. Total maximum profit 4.30 times 100. That is 430 per contract. Break-even point calculation. Text lowered BP K1 plus D equal $435 plus $0.70 equal text TBF $435.70. Text upper BEP K4 minus D equal $450. $0.570 equal TEX TBF 444.30 to achieve minimum profit greater than $0.00. The stock must expire between the two break-even points. Text BF $435.70 mass BF BP BF T text BF $449.30. The trade is most profitable if the stock closes between text BF $440 and text BF $445. Note: cryptocurrency options trading is complex and highly regulated in the USA. Options on crypto are primarily available on future contracts like CME Bitcoin futures options or through specific, sometimes unregulated crypto derivatives platforms, and may not use the same equity options structures or US regulated platforms. Long Put Condor trading process direct step-by-step process only. Market analysis and strategy selection. Determine that the underlying stock or ETFs, for example SPY, is expected to have low volatility and remain neutral on its price movements until the options expiration date. Step 2. Brokerage and approval log into your approval US brokerage accounts such as Thinkorswim or Interactive Brokers with the necessary options trading approval level for multi-leg spread. Step 3. Option chain selection. Go to this option chain for the underlying assets, that meaning SPY. Select a suitable expiration date, e.g. 30 days out. Step 4. Condor setup. Set up the 4 legs of the long put condors simultaneously. Buy 1 put, lowest strike price, that is 435. Sell 1 put, lower middle strike price, lower 440. Sell 1 put, higher middle strike price, 445. Buy 1 put, highest strike price, 450. Step 5. Review net debit. Verify the net debit, the cost of the entire spread. For our example, this is $0.70 per share or $70 total. This debit represents your maximum possible loss. Step 6. Place the trade entire. The trade has a limit order to ensure a favorable execution price. Submit the order. Once filled, your long put condor position is established. Step 7. Monitoring and expiration. Monitoring the underlying price. SPY. For maximum profit, you need the stock to be between the two short strike price, that is $440 and $445 at expiration. For any profit, the stock must remain between the two calculated break-even points, $435.70 and $449.30. Long put condor profit loss graphic elaboration. The profit loss graph for the long put condor visual represented the strategy outcome at expiration based on the underlying asset's price. It clearly shows the defined risk, defined reward, and the price range where the trade is profitable. Key features of the profit and loss graph. The graph is shaped like a mesa or a shallow bowl, and its defined by the four Susan strike price $K1, K2, K3, K4, and the initial net debit D dollar. Future condition at expiration. Result per share maximum K$2 S text maximum K2 S text maximum. Future condition at expiration. Result per share. Profit zone K3 K3 minus K2 minus D dollar. Maximum loss zone LEK1 S GEK $4. Text maximum loss equal DS. Break even points, that means BEP. Text lower BEPS or SS. Text upper BEP dollars. Profit loss 0 equal 0. Graph interpretation based on price movement. Maximum profit scenario, the sweet spot underlying price closes between the two short put strike K$2 and K3. Example, if yes dollar K2 equal $440 and dollar K3 equal $445, the underlying closes at $442. Option expiring long puts dollar K1, K4 expires out of the money and worthless K $1, the higher strike long put K4 is also expires OTM. Short puts K$2 K3 X expire OTM and worthless. Result, all options expire worthless and you keep the initial net debit, the premium collected from the short legs. P2 plus P3 exceed the premium paid for the long legs. P1 plus P4. You realize the full width of the short spread. K$3 minus K$2 minus the cost 2. Partial profit loss, the slapping edges scenario, a price between K$1 and K$2 as dollar falls from K$2 towards K1 minus $DS moth BF. Short push starts moving in the money. ITM causing the trade profit to decrease until it hits the lowest BEP. Scenario B, price between K$3 and K$4 as dollar rises from K$3 towards K4, the math BFK. Short put starts moving ITM causing the trade profit to decrease until it hits the upper BEP. 3. Maximum loss scenario, outside the outer strike, underlying price close below the lowest long put strike or above the highest long put strike. Result, both the SK dollar long put and $K2 short put or deep ITM, the value of the $K, $K1, K2 spread approaches its maximum width $K2, K1. This $K3, K4 spread also approaches its maximum width K4 K3. The profit loss structure nets out and you lost the net debit the dollar paid to open the trade. Result: S4 K dollar for bullish side. All four puts expires out of the money and worthless since you paid a debit to open the trade. This debit is lost. This is the maximum loss scenario. Recap example calculation using the previous example where mass $0.70 and the strike are $435, $440, $445 and $450. That is 4 leg. Maximum profit $445. Maximum loss $450. Low break-even point $435.70. Upper break-even point $449.30. The goal of the long put condor is for the underlying assets to remain confined between $435.70 and $449.30 to realize any profit, with the highest profit realized between 440 and 445. This is the long put condor strategy. And another, I have given 5 cash trading company shares, that is penny stocks, and growth will soon growing. Note: price are illustrative and based on a hypothetically below $50 conditions for liquid US traded financial stocks. Distinction from the penny stocks mentioned in the chart's results, which were predominantly non-US company. Description: hypothetical target price, hypothetical center price. Sophie Technologies, a mobile first personal finance company and bank holding company that offers a range of financial products. $10, $9.50. Robinhood. Second, Robinhood Markets operates a financial services platform in the US known for its commission-free trading. $15 and present price $14.25. Gold, Sobel Show Global Market, CBOE, a leading operator stock exchanges, optional exchanges and market data provider, including the VIX index. Target price is $150. Now present price $145. Interactive Broken, IBKR company, a global electronic broker that offers advanced trading platforms for stocks, options and futures. Target price $100. Now current price $98.50. Swab CHW company, the large financial services company offering banking, investment and wealth management including the Thinkorswim platform. Target price 75. Present price 72.505. 720.50 price. Future condition expiration results. Maximum loss $4. Maximum DS loss. Profit or loss 0. Present position. Please like, subscribe and comment. Another 2 minutes video is there. That is hot touchable video.
The Long Put Condor is an options trading strategy designed to generate profits when the underlying asset remains within a specific price range at expiration. By combining 4 put options with different strike prices, traders can create a position that offers limited risk and limited reward. This strategy is particularly effective in low volatility markets where significant price movement is unlikely. In traditional financial markets, such as stocks, the Long Put Condor is widely used by traders who anticipate minimal fluctuations. While cryptocurrency options trading is still evolving, some platforms now offer similar strategies, though their availability may be limited. The Long Put Condor is best suited for environments where stability prevails, making it a valuable tool for managing risk and capitalizing on periods of market calm. To demonstrate the Long Put Condor, let's use a practical example with a stock trading at $100. On a US-based platform like Fidelity, you would buy one out-of-the-money put at a $50 strike, sell one put at $55, sell another put at $65, and buy a deeper in-the-money put at $70, all with the same expiration date. Price charts on the platform visually show the risk and reward profile, highlighting that maximum profit occurs if the stock closes between $55 and $65 at expiration. The minimum profit is calculated by subtracting the net premium paid from the difference between the two middle strike prices. Fidelity and similar brokers provide tools to structure this trade and analyze outcomes before execution. In the cryptocurrency options market, platforms like Debit offer similar functionality, but the strategy's effectiveness may be limited due to higher volatility and evolving product offerings. It's important to review current market conditions and platform capabilities before implementing the Long Put Condor in either stocks or crypto options.
Some another images are there. 5 cash trading. Defined risk strategy. Profit growth. 5 cash shares. Please like, subscribe and comment. Thank you, my dear friends. We will meet next episode, next video. Thank you once again.